Imagine you would live in a world where there would be 1.5 or 2 degrees, but it doesn't have any plants or animals, or the ocean would be completely acid. Our approach is that we are a specialized circular economy fund. And what we have done is basically mapped our different strategies onto those sort of 9 planetary boundaries as an enabler to stay within the safe operating space of the Earth. Influencing how much people consume is really hard. I think all data tells you that as soon as living standards increase, people consume more, travel more, do more. We like to get to roughly 100 million of revenue within 5 years. We're living in a society where, things that get measured gets done, and things that get measured get financed.
This episode is brought to you by Accelerating Impact, a non-profit that drives impact finance by running free accelerator program to support emerging impact managers. By joining them, you will get coaching, training, financial support, and access to a strong community of emerging managers. Sign up at the link in the description, and thank you to Accelerating Impact for supporting this episode. Before this episode, we were chatting, and one of the things you said to me is, even at 1.5 degrees, we could still lose the planet. What's happening?
We're definitely cooking the climate, and we're ready for the 1.5 degrees. So, yeah, climate is a big issue. But, imagine you would live in a world where, there would be 1.5 or 2 degrees, but it doesn't have any plants or animals, or the ocean would be, completely acid, and no fish are swimming in there. So I think there's a lot more to our planet. And if you, of course, look at the historical perspective, temperature has gone up and down. And I'm not saying, the current is clearly man-made. But I think climate is only one of the elements that guards and makes the planet sort of a safe living space for all human beings.
When we think about that from a VC perspective, what does that mean? How do you invest in the planet if it's not climate?
I mean, I think we also look at of course, we also look at carbon and but it's one of the elements we look at. So the way we view it is basically sort of what needs to happen to stay, within the planetary boundaries. So we use the sort of 9 planetary boundaries framework as a lens to look at. And then if you compare, things that are related to energy, they mostly have an impact on climate and CO2 or methane. Whereas if you look at the theme of circularity, it actually has impact on not just it's actually also 45% of the carbon footprint, but it's 70 to 90% of biodiversity, most of the water stress, toxics, ozone depletion. It's much more to do with products and materials than just with the energy piece.
What does the data tell us today? Mostly I'm looking at this from an economic opportunity for VCs, but also for the planet. So obviously you said circularity unlocks the biodiversity aspect of it. What else should I know about the space if I want to invest in sort of not only carbon, but also biodiversity, oceans, and the rest of the planetary boundaries?
Our approach is that we are a specialized circular economy fund. And what we have done is basically mapped our different strategies onto those sort of 9 planetary boundaries as an enabler to stay, within the safe operating space of the Earth. So we're not looking at it through a lens of we're going to do pure biodiversity investment. We're doing circular investments, which we define as what can you do in the design phase? What can you do in the use phase? And what can you do in the reuse phase? in global supply chains. And then we even narrowed our thesis towards consumer, such as consumer supply chains, consumer value chains, such as food, textiles, fast-moving consumer goods, beauty, electronics, things like that.
Talking about consumers, do you think they are the driving force for the transition, or do you think we should actually take the problem the other way around and push corporates to do better so that consumer can just consume better?
Well, our stance is, I think, influencing, how much people consume is really hard because I think I think all data tells you that as soon as living standards increase, people consume more, travel more, do more. So our angle is really more on enabling consumption, but then in a way that's not harmful to the planet.
What can we do at each of these stages to help? Like if we start with design, for example, what makes a better design, a circular design?
Well, that of course really depends on where you're looking at. But there's sort of, within circularity, there's sort of four things we really look at is, how can you use less materials, right? So that's sort of strategies around, we used to have DVDs, right? And now we have Spotify, right? So it's actually, it's fertilization of the physical asset. But it's also strategies where you can use, less materials to get a certain job done.
A quick question on that. So if we go back to the early days of Spotify, imagine they come to you today and they tell you, because that's a bit of storytelling, obviously, but they tell you we're going to remove DVDs or CDs. Could that be part of your thesis?
Yes, it could be. Yeah. And that element I'll come a bit later in terms of there's some other elements to our investment thesis for us in order to have a thesis fit. But in principle, they're using less materials to get a certain job done, right? And I'm sort of now talking a bit in terms of, how I view circularity. Yeah. And of course, what we then do as a fund has a whole bunch of other limitations in terms of check size and technologies and things like that. But in principle, where you can use less materials to get a certain job done. Another example, would also be sort of design choices you make, right? So I think we're now in Paris, right? Like you can get from A to B in a car, but also on a bike, right? And you would use, about 1,000 kilos less materials to go from A to B, but it also has a ripple effect on other things. You need less roads, you need less parking, you need less energy during the lifetime of that design choice, right?
So that design choice is more like a big picture city design on how you organize things, right?
Yeah, in that case for the bike, but you could also think about, having, materials where you use substantially less of the material. So that's sort of the first category. The second category is how can you use things longer, right? So there's a lot of, I think, single-use plastics is the best example, right? So you get oil from the earth, right? You turn it into a plastic, you use it only, maybe for a couple seconds and then you throw it out, right? That's a really bad use of resources. So it's basically how can we slow down the metabolism of products and materials and to keep them, as long as possible. So these are all kinds of things, how can you build things that last? How can you do different business models where you have much higher asset utilization? And I'll give you some examples of some of the things we invested in. It's also about, repairing or building things more modular so you can actually, put things together more easily or disassemble at the end. Then the third category is what we call regenerate. And regenerate is all about creating new products and materials that don't harm the earth, right? So you get into the space of, replacing styrofoam with cruise foam, one of our portfolio companies that make a replacement of styrofoam based on shrimp waste, right? So, and then you create biodegradable products, and that's a bit how nature works as well, right? There's no waste in nature. The leaves fall down and they create new trees. So you try to create that natural loops, and sometimes even ideally making the world better by introducing a new material. So not doing harm, but actually doing good. And the last piece is the traditional cycle, right? And then you go into, how can we harvest the raw materials that have been part of a product? But to us, that piece is actually a relatively small piece of our thesis, because by the time a product has gone through the design and the use, and you're sort of stuck with waste, your options are very, very much limited. And I think that's sort of, a bit of the drama we're seeing unfolding in, for instance, in the plastic recycling space. You get a pretty shitty, multi-layer, dirty thing, and then, trying to turn it into something, and then competing against a relatively cheap version. That's, a hard battle to win. So, we do have a number of investments in that arena, but we really like to think about sort of the design choices you can make earlier in the cycle.
Talking about the use, I think something interesting you said on the plastic and single use is, and the virgin materials there is the price, right?
Sure.
The world, unfortunately, is run by prices, right? Like the cheaper you can get, usually the better for consumers. How do you change that? How do you fix it as a startup? Because obviously competing with single-use plastic means being able to deliver bags that either you use it on the longer term and as a per-use basis it's cheaper, or if you use it on a single time, it's going to be incredibly complicated because unfortunately we've been so good at just producing this plastic, right? Which is probably not the best use of our time as humans, but we've been good at it. So how do you fix this as a startup? And also, I guess maybe from your investment lens, how do you look at prices and costs? Because that's the name of the game, I guess.
Absolutely, and that is a big challenge for a lot of companies because you're, of course, competing against a very efficient linear supply chain, which has been optimized over many years and has a lot of scale advantages. And of course, in most cases, any sort of negative externalities that those linear products have, in terms of CO2 emissions and biodiversity loss and all the things are, of course, not included into the pricing, but are externalized. So I mean, let me give you an example for one of the companies I started, because I did sort of 4 companies before I became a VC. And it was a company called Black Bear where we extracted high quality materials out of tires. So, why did that sort of business model work? And so it had a couple of reasons. The first is our feedstock prices were substantially lower, right? So the traditional way of, the products and materials you harvest out of tires, it's basically steel, rubber, and a black powder called carbon black. And the carbon black, as well as most of the rubber, is made from oil. They had substantial initial costs in order to do that. Whereas, the tires, we got pretty much for free, right? So you have lower feedstock costs. In addition, the second element was, and actually that goes for quite a bit of extracting things out of waste startups, is that, for instance, if you create glass or if you create aluminum or you create steel, creating that from ores is very, very intensive in terms of energy use. Whereas if you extract it, out of waste, it's less energy intensive. So actually you can have substantial lower costs there. So these are some of the elements, right, where it's, very much a cost equation. But there's also places where the bio-based or the alternative material actually has superior qualities, right? So, and I think you had Yahir on your podcast a while back, and I think one of his mantras is, there's no green premium anymore. That's very, very true. So we would never underwrite a company that either relies on green premiums or, regulation that may come into place.
And When we think about starting a company in the circular economy, is that how you should start? So first looking at just like the economics of it. So if we go back to the example of your company, I'd be curious how you started that company. Was it an idea of, okay, there is a lot of tires that are going to trash and we're not doing anything about it except from burning them? Or more like, oh, actually, this is value, and if we can convert this back into raw materials, we can make money on it. Like, how do you start that company?
Yeah. No, it's very true. We definitely started a bit more from the consumer angle, or from the I would say end user angle, and we saw the the tire companies, but it also goes. You can also use it as a pigment in paint or in ink or in for textiles. They were definitely under pressure to look into lower carbon options. So there was quite a big demand in it. And then we worked sort of our way backwards. And clearly, it's very helpful for your economics if the waste that you're using is available in large quantities, inexpensive or free. And lastly, not unimportantly so, that there is actually a collection system in place. So look, if in tires, like 95% of all the tires in Europe actually get collected and get sort of collected in pretty much centralized places. And it's just tires, right? It's not mixed with household waste or other things like that. So you have a pure stream, which makes it much easier to build a business around it.
And I would also assume that the quality of the tires is quite consistent across, because it's. I would assume that there are only like 4 or 5 companies like building tires. From
no,
scratch.
there are way more. There are way more companies. There's of course a couple of big ones like Michelin and Bridgestone and Goodyear. So those are the bigger ones. But there's a long list, and when you sort of get into that world, you also discover, there's so many different flavors of tires and how they're built and the types of materials they use, that, it does get pretty sophisticated. And in some cases, we also had to sort the tires based on the feedstock, which is, I think one of the other big issues is that, like, typically, if we're talking sort of to the waste to new materials category, is, the quality of your feedstock is quite important for the quality of your output.
Yeah. And that's also like, you have to make sure that you have, as you said, enough of it, of a consistent enough quality. Because basically it's like you're replacing something that you usually buy from providers that is just producing that just for you to, okay, now I'm just picking up trash from someone else and trying to do something with it. It's
right.
Like definitely a
consistency and quality and all those things are usually important. And so we have done less sort of as Regeneration.VC, we have done less on, the sort of heavy recycling, building recycling factories. We have been quite active in the sorting step because we feel that's really crucial. So one company we invested in is a company called Grey Parrot.
Yeah.
That basically uses a camera system that sits on top of a waste management facility and uses vision, pattern recognition, and AI to tell exactly what's what at the up to the SKU level, and then basically directs the robots to pick up the right stuff.
When we think about actually some of your investments, as I said, I'm learning the craft of VC. Martijn, tell me, how should I invest in a circular startup? What should I look for?
Well, I could tell you what we look for, and I think everybody has to figure out that question for themselves. But we basically said we want to focus on these consumer value chains, right? And then look at the design, use, and reuse, but like really be a bit more on the front end of the decision making. So that's sort of our thesis. And then there's a third element to it, where we believe it's really, really helpful to have a consumer brand that is active in those supply chains, to be, very much involved in the investment, either as a customer or as a co-investor, or ideally both. And the logic for this is the following: is if you operate into a value chain, let's take textiles, right? If you take a brand like H&M and you have a company like Colorifics that we invested in that makes pigments, but completely bio-based. It's actually not H&M who will buy your pigment. It's actually a coloring house, which is maybe 2-3 steps in the supply chain, which is maybe in Bangladesh or some other places. But our thesis is if you don't have that brand involved that basically pulls those solutions through the supply chain and can create scale, it's very, very hard for a circular economy company to be successful. So what we have seen, and if you look at the market, there's, like if you go to a trade show or something like that, there is always, a lot of what I would call very interesting, cute companies, right? I think leather is a great example, like cactus leather and, like homegrown leather. And I saw kiwi leather. And by the way, I'm not dishing these. It could all be great innovations. But the innovation itself is just a starting point. And if you're in clean energy, of course, or, in some of these other categories, you create a commodity, electricity or replacement for fuel or something like that. Or battery storage, right? It's sort of a known entity. And if you can sort of hit certain things, you will, there will be a market. That's not that obvious in the circular economy. So creating this very strong pull for that supply chain, we believe is really important for successful investing. So that's why we're working very closely with IKEA and H&M and Sony and Amazon. Basically have identified who are sort of the leaders in each of these consumer value chains and work very closely with them, looking for companies that may fit, that solve a problem for them, and vice versa. Sometimes they come to us with solutions and bring them into our investments.
So your take on the situation is basically that the brand is the one that has power in that value chain. Is the one that decides basically what they want. And that's why you want to have them involved from the get-go, because you know that they are the one that have the power in that value chain.
Yeah, absolutely. Because a lot of things need to, like when I was back at the at Black Bear, the circular tire company, we had a conversation with Michelin. I asked them, it's like, if you have a new carbon black that's about 25% of a tire, like, and you want to introduce a new carbon black, how long does it take? And he said, well, if it's just one from an established vendor, it's about 10-year cycle. And I said, okay, so what about if it's a recovered carbon black from an existing tire? It's like, ooh, then so, we add another 5 years. So think about those type of supply chains you're trying to shift. And there's, of course, understandably so, these companies are conservative, right? Because the last thing you want to have is, tires exploding in cars, people dying. There's a lot of risk. And the last year, they actually put these tires on a roller and roll them like for a year and see what happens, right? So, and there's a lot of sort of gatings and tests and stuff before that. So imagine you're a small startup, right? And you're in that system, right? And you're trying to change that system with a new thing. My frustration was, we even like a sample where you would send a sample to a customer and, they would get it and they would put it somewhere on a shelf, and then pretty much nothing happened unless somebody tells you, it's important or it gets priority or something like that. So having that pull from a corporate who cares about that is highly impactful, but also very hard for a startup to achieve.
Yeah, for sure. If we go back to the investment playbook, I think you invest sort of like seed Series A. Is that your sweet spot?
Yeah, we always call it a late seed.
Late seed.
So like mango seed, we do big seeds.
Okay, big seeds.
And the reason for that is because we want to have these brands, these corporates on board. And in order to do that, ideally there's something they can buy. So we do need to have, need to be close to, doesn't necessarily have to be revenue, but they have to be close to product market fit. Because if it's more like, hey, we're experimenting in a lab, then it's very hard to get that alignment.
Makes sense. So where you invest, so sort of that late seed or big seed, as you call it, what are sort of if I look at, I don't know if you've seen that deep tech napkin, but basically the idea of like having a table that summarizes everything. I want to do that with you.
Okay, let's create a napkin.
Let's create a napkin. So if we start with revenue, late seed, what does that look like?
Well, so, I'm not trying to complicate things. But like, of course, you have circular economy, right? Sort of design, use, reuse. But then you have the other axis, which is basically what are the enabling technologies to do that, right? So you have, software, you have software hardware combinations, you have purely, like material, physical, biotech type of profiles. And they all behave differently, right?
Yeah.
So for a software thing, we definitely want to see revenue and adoption and customers. For hardware, it could also be, a working prototype that, like a customer can see and say, hey, once we've built it at scale, we're willing to adopt it, but, we can sort of play around it and we can sort of see that it works, but it may not, be at scale or, so it really depends. And if you're looking at a material, you get a bit into the scaling story, right? So you typically go from, a couple kilos in the lab to a couple, hundreds of kilos in a, demo. And then, sometimes, it gets bigger.
Yeah.
So you get a bit sort of those sort of scaling mechanisms. So it's not that straightforward to create like, a de-circular economy. So the way we look at it is, the first phase is, does it fit our thesis, which is sort of the, the couple elements. Is it circularity? Is it, of course, hitting our impact metrics? Is it in a consumer chain? And can we, is there this pull through the supply chain, or can we create it, right? So if we're really excited about a company, we sometimes start working with them when they're, small seeds. And we say, hey, this is also some of the solutions we know some of our partners are looking for. Can we help you, get into the supply chain and sort of make the relevant introductions in order for us. So the selfish reason, of course, is that it then becomes investable for us.
Of course, yeah. It's you can clearly see the former entrepreneur in you that wants to help the company from the get-go. Okay, revenue is one, we understand. So it's basically from a working proof of concept, I would say, for more of the deep tech stuff, all the way to real revenue and traction if you're software.
Yes.
That's the range. Market size, really important. What are you looking for? What's the minimum?
Yeah, so like our rough cutoff is that we like to get to, roughly 100 million of revenue within 5 years.
Okay.
Right? So that's sort of the really, raw metric. In terms of market sizing, we don't have a very harsh rule there. And one of the reasons is that, often you start with a market that's relatively small, but that you can expand the, the category. So, let me give you an example. So, we recently invested in a company that reduces food waste in hospitality. The company is called Orbisk. So if you think about that solution, they sell mostly to hotel chains and things like that. But if you look at it a bit more from an holistic perspective, is 1/3 of all the food in the world is wasted, and 20% of that is in hospitality. So you're looking into a massive amount of food loss, which has a massive impact. Currently, the solution works really well for hotel chains, right? But like, could it work for catering? Could it work for cruise ships? Could it work maybe even at the household level, right? So I think if you take too much of a narrow approach on your market size, you're already limiting very much the potential of a potential solution.
That being said, you want to see 100 millions of revenue in 5 years. So
Yes.
that tells you that the market, even if a company can take, 10% of a market in 5 years, which is, I think, huge. That means that you have at least like a 1 billion market or plus.
That's fair enough. But I think a lot of VCs would argue a billion market is quite small.
Is that important for you that it's adjacent to a growing market or to a trend? Meaning that, okay, great, you might have a 10 billion market, but if it's growing 1% a year, probably not sexy enough for you or attractive enough. Is that important to see also growth and some sort of traction within that market so that the solution gets somehow of a push into the market?
My perspective on that is, the growth rate of your company, and you typically, want your companies to grow 3x a year, right? It's sort of in our phase how good looks like, is 300%. You will find very few markets that will grow by 300% a year. So the element of how fast the market grows is way less important than how disruptive the solution is in the space. And that's just by the mathematics. That being said, often markets that grow faster, right, are more open to innovation. There are new players coming on, and it's actually easier for those companies to operate in those markets. But in terms of the growth of the market they're operating in, we can have companies operating in a very conservative, flatline market, but still growing at a very rapid pace.
Couple of last questions on that before we switch bit topics and I stop just learning for myself. But team composition, founders' background, what are you looking for specifically there?
Yeah, so it's always a bit of a combination between the sort of technology angle, and I mentioned sort of different categories: software, hardware, more materials, biotech. So you need some deep knowledge on the technology angle. And then the other one is, because you're operating in these complex supply chains, is that the domain knowledge of the vertical is also quite important, right? So the ideal, would look a bit like, somebody who has that sort of deep, technology knowledge combined with a bit more horizontal industry experience. And then I think, a lot of it is, what you're looking for, in a great, hungry founder team, which is of course diverse, et cetera, et cetera. So there's no hard rule. There's not necessarily a sort of a hard rule there. And of course, what we find is there are quite a few companies who embrace circularity as their theme, but there are very few investors who actually are pure play circular economy investors. So what we do see is that the folks that are ambitious, they do find us relatively easily.
That's great. That's being very specific as an investor, I guess, helps with attracting the right talents. Cool. Well, let's switch topics a little bit. One of the things you mentioned before this episode is that one of the struggles you find in the circular economy is measurements and maybe traceability, I guess, coming with that. Why is that important today to have a proper measurement for circular startup? Why does that move the needle?
Well, it's incredible important, right? Because we're living in a society where, things that get measured gets done, and things that get measured get financed. So if you're in this space, and I think the time is gone when you go a bit of the hand waving. It's it's good for the planet and everything. People are expecting that you can measure results, not only in financial sense, but also on an impact sense. The challenge with circularity is, it actually impacts a lot of the different planetary boundaries, not just the climate one. And the climate one is, mostly driven by CO2 and, some methane, but those are the sort of the two, big ones. So you can actually track CO2 reduction or CO2 reduction equivalents, as it's called. And there is a protocol for that, the Global Greenhouse Protocol, which is developed over 20 years ago and is very well established. So I think even that is hard, but there is a well organized way to measure and audit and et cetera.
And also you have like a conversion to money, which, as you said, in the system that we currently work with, like being able to convert CO2 into money equivalent is also quite important.
Yeah. So you have CO2 pricing and et cetera. So I think that's relatively established. If you look at circularity, and after my last circular economy company, I ran a foundation called Circular Economy Foundation for 4 years, and we were, I spent a lot of time on, measurement and working with European Investment Bank and working with other measurement institutions, and of course we had our own circularity gap measurement and circularity gap report where, we looked at how circular is the world and how's that trending. Is that it's actually quite difficult to come up with, metrics that, capture the full potential of the circular economy. At the same time, you don't get into 50 KPIs and get sort of overly complex. And then thirdly, not unimportantly so, where you have a bit of harmonization and, alignment as happened with the Global Greenhouse Protocol. So if you look in the last sort of 10, 15 years of where circular economy really sort of, came up, there was basically every standard institution had their own set of measurements. So you had ISO, you had CTI, which was adopted by the World Business Council for Sustainable Development. Circular economy had the gap measurement, but realistically, very few companies truly adopted these sort of measurements, and as a result, one of the side effects was that the category as a whole got substantially underfunded compared with the impact potential. So we tried to come up with a rough number, but like compared with sort of the energy transition, there's only 10 to 15% of the VC going into circular economy materials transitions. But if you look at the impact potential, it's almost half of the carbon footprint and, almost 80, 90% of biodiversity, et cetera, et cetera. So it's really underfunded from that perspective. And I think the measurement piece certainly has to do with it.
And do you see it as a category, meaning that, because circular economies, I see it personally as a model that could touch potentially, as you said, for example, energy, right? Or like whatever, like businesses or verticals that exist. Because I see it just as a way to think through how you're going to do things as a business. How do you see it yourself? Because it feels like you're seeing it more as a category.
I mean, there's always different ways to slice and dice it. So if for instance, I talked about consumer value chains and I talk about food, right? Or electronics. You could also say, we're just looking at, food, for instance. And if you look at food, it's, 10% of emissions and, roughly half of the biodiversity loss, right? As a category. So there's always, different ways to slice and dice the data. We look. I look at circularity as a powerful framework and a means to an end. So, our end goal is to stay within the planetary boundaries, right? That's our goal, because that's how humans and all living beings can survive on this planet. It creates a safe operating space for all. And in order to do that, if we switch to a circular economy, throughout all our supply chains, that will have a, massive beneficial impact on those planetary boundaries, while, you combine it with, there's the world economy in there, right? Without sort of needing to rely on radical sort of degrowth strategies and tell people they cannot consume or they cannot do certain things. So that's the way I view it. And then, of course, it has cross sections with all kinds of other things. So, what we very often see is that if you look at, a clean tech portfolio of a more generic venture capital fund, they will also have circular economy investments in there. And often we partner with them, especially on the specialized funds. So, we typically lead or co-lead deals. But in some cases, I mentioned, for instance, the food waste reduction company. We partnered with a firm called Peakbridge, who is a pure play food investor, right? So we always try to find somebody who can complement our skill sets in a specific vertical, but it could also be in a technology, right? So if we would make an investment, for instance, in robotics, we may want to do that with a robotics fund because they also bring specific expertise.
Look, we're getting toward the end of this episode, but one of the things I wanted to explore with you is how to convince more LPs to care about the circular economy, not only as a let's do good and let's have an impact perspective, but also, hey, look, that's where the economic opportunity is as well. How do you do that? I mean, you have probably tons of discussions with LPs on a monthly basis. So, what's their reaction to your model and how do you convince them to come along?
No, it's a good question, and of course it depends a bit on what the LP is looking for, right? That's the starting point. So you have to meet them where they are. I think there's a couple things LPs generically like, and there are some things they like specifically about us. I think what they generically like is specialization. Right, because there have been so many more generic funds that have been started in 2021, 22, that it's hard to decide who to invest in. And often they formulate their own strategies and are looking for specific elements in their strategies, and then are looking for managers to execute against portions of their investment strategy. And there may be space for some generic players, but they're typically looking for more specialized ones. Now, what we find is that if LPs sort of are indeed convinced that and of course we speak mostly with people with LPs who have a financial interest, but also a impact mandate. That category of LPs, if they care not just about carbon, but also about the other planetary boundaries, I think that's typically a good starting point for the conversation. And then you get into a conversation of, what can circular economy bring to these other planetary boundaries? And we have quite good evidence in terms of what the impact can be. So I think that's helpful. And then from a financial perspective, what of course helps is if you invest in a underinvested category where you have a lot of founders adopting circular economy as their branding, as they see themselves as circular economy entrepreneurs. They're looking for a specialized investor. And our team has done a great effort in getting the offer of the book Cradle to Cradle, Bill McDonald, and the chairman of Mars, and all the people surrounding the space have been of course active as an entrepreneur, but also as leading a foundation. So we have a lot of sort of expertise and connections in that domain.
And when I think about, if I put myself in the shoes of an LP, one of the things I would want to see is success stories. Right?
Sure.
What are the success stories in the circular economy? Can we mention a few?
Yeah, no, absolutely. So, if I look at our own portfolio, for example, so I think I mentioned the company Colorifics. So we invested into Colorifics together with H&M. And what they do is they look at basically bright colors in the tropics. And if you go to the tropics, there's a lot of bright colors. They harvest the DNA string and then they basically create bio-based pigments in using biotech and bioreactors. So quite deep tech, a lot of PhDs out of Cambridge doing that piece of work. So No, and now we recently did a quite large follow-up round with IKEA, who is of course interested to invest, but even more interested to use it because there's a lot of textiles in the IKEA stores as well, and they're looking for a bio-based solution in that space. And the interesting thing with pigments, I think it's a great example where if you look at the textile value chain, you basically have the fiber, which is a big portion. But after the fiber, pigments is the most carbon intensive and the most polluting piece of the value chain. So I think it's something quite interesting to address.
That leads me to a topic that we haven't explored yet, but still, you caught my curiosity and you caught my attention, I guess, there on corporate ventures, right? Because you mentioned that company and then all of a sudden H&M is part of it, IKEA is part of it. Is that the way to win in circularity, kind of consumer-driven brand? Is the way to win to bring the CVCs along with you?
Yeah, no, we certainly think so. And ideally not just the investment arms, but also the corporates that are behind it, which, is not always obvious, right? Because they're different teams and they have different incentives. But of course, we believe those supply chains are complex. It's hard, and if you have a major brand sort of pulling in the right direction, you set yourself up to win.
Interesting. Well, look, is there? We are at the end of this episode, but is there one topic around circularity that we haven't explored that you would like to, say a few words about?
Well, the other area I'm really interested in is the use phase, and I think we haven't really spoken about that. But of course, you can unlock great economics by better asset utilization. And one of our companies in our portfolio is a company called Tulu. And what Tulu does is, if you're living in a apartment building, so let's imagine it's like, 40 apartments here in Paris, a small square footage. You pay, some outrageous amount of €4,000 for a very small amount of space. But you don't want to have, a lot of stuff in your apartment, right? So things ranging from, drills, carpet cleaners, projectors, karaoke machines. So Tulu basically has a solution where you can just go down, and you have a Tulu unit next to the concierge where you can basically pick the stuff you only need on an occasional basis. It's now being rolled out with real estate developer Greystar. Some cases they even include it in your rent, right? So it's basically almost becoming like a better experience for people, compared with buying the things and clogging your apartment. And for the real estate developers and the tenants, it's like you want to have a concierge, you want to have a gym, and you want to have your Tulu, right? So it's a real win-win. And in terms of asset utilization, every device that's in the Tulu unit replaces 10 devices that otherwise would have been bought. And it's something we did together with Bosch, who, by the way, is also getting very interesting use data now, right? Because typically these brands, they sell something and then they sort of lose track of the consumer. And you really want to be really close to the consumer, see how your product is used, how often it's used, by whom it's used. And, like in a model like that, incentives change as well, right? So Bosch really would like their unit to, not break down after half a year, because then they have to replace it in the Tulu unit and it gets used quite a bit. So they want to create things that last and are efficient.
But it's interesting because if I put myself in the shoes of Bosch this time, they want to sell more products. They don't want people to share the same products. Their revenue is going to go down if they sell less, no?
Well, it's an interesting point, right? So it's like I think a lot of these things will happen anyway, right? And it's either you're part of the revolution or you're not, right? And I think some of the most successful internet marketplaces like Uber is one example. Airbnb are all about, better asset utilization because it unlocks such powerful dynamics. And if you can create a real frictionless experience, it's really a place where you can create unicorns.
Yeah. It's funny because I'm thinking about it now in the context of that podcast studio. I'm like, basically people have cameras in their home to record podcasts from time to time, costs them a lot of money. If you put them in a studio where people can come in and just like record and leave, better asset utilization for all of these cameras.
Exactly. Exactly. Yeah.
It reminds me of a few companies that I have to introduce you to after this episode. But look, we are at the end of this episode. So one question for you is, first of all, where can we find you online? If a startup wants to reach out, a co-investor, an LP, whoever wants to reach out to you, where can they find you?
Yeah, so about 10 years ago, when I sort of transitioned from, being an entrepreneur more on the digital entertainment side to circular economy and tried to combine entrepreneurship with purpose, I decided to also spend 10 to 15% of my time on helping the movement. So the best way to find me is actually on LinkedIn, because I've become sort of more active there. I like, having dialogues with people around the world who sort of approach me with all kinds of questions. And I, of course, love to talk to entrepreneurs.
Yeah. People don't know you for that, but you're almost an influencer by now. Next question is, who's the next GP that should be in your seat for an interview? Is there someone that you highly look up to, another investor that I should have for an interview?
That's a good question. I haven't thought about that before, but of course we love people who are building great sort of seed stage companies, because we of course can then invest in them. Having lunch tomorrow with Alex Bakir from Norscan Evolve. I don't know if you have spoken with him already.
Yes, we have, but it's not yet public.
There we go. Okay.
But it is great for sure.
I think I've worked a lot with early stage company, but more as a mentor and less on the investing side. And I think they have an interesting model where they combine investing in a lot of companies, but sort of also have a high touch approach. I find that sort of intriguing. I think the jury's still out how they'll do, but I definitely like what they do and how they bring the Norscan brand into that equation.
For sure. Well, for people that want to listen to this episode, I believe it's going to be released before this one. I hope at least. So really great episode. I think Alex is a very amazing human being and also a very smart investor, at least from my perspective. But look, listeners, if you like this episode and if you like the show, don't forget to like, comment, and subscribe if you're on YouTube, or to give us a 5-star and comments on Spotify and Apple Podcasts. Thank you so much, Martijn. It was a pleasure. And also, if people want an introduction to Martijn, just contact me. I'm also a great source for introduction. Thank you so much, Martijn. I loved it.
Excellent. Thanks a lot, Hugo.